Let me be honest with you for a second. Most people will never build real wealth. Not because they're not smart enough, not because they don't work hard enough, but because nobody ever sat down with them and explained how money actually works in plain, simple language. And today, that changes for you. I want you to think about something. Picture yourself 5 years from now. Same job, same paycheck, same financial stress. The same quiet panic when an unexpected bill shows up. The same feeling of watching other people seem to figure something out that you haven't cracked yet. That image should make you uncomfortable, because that future is the default. That's what happens when nothing changes. But there's a different picture, and I'm going to show you exactly how to get there. Let's talk about what's actually happening to your money right now. You work hard, money comes in, money goes out, and somewhere in the middle there's this vague hope that things will just somehow work out. Maybe you have a savings account earning almost nothing. Maybe you throw some money into a retirement account at work and just hope for the best. Maybe you've thought about investing, but the whole thing feels like it's designed for people who already have money and already understand the rules. You feel like you're on the outside of something everyone else seems to know about. That feeling is real, and it's not your fault. Here's the truth that the financial world doesn't advertise loudly enough. The strategies that grow real wealth over time are not complicated. They are not secret. They do not require you to be a finance genius or have a massive amount of money to start. What they require is understanding a few core principles deeply enough to actually act on them. And before we go further, I want to mention that we do have related programs linked in the description below this video. Programs that go much deeper than what we can cover here. I'm telling you now because the people who take action early are always the ones who look back grateful they didn't wait. The ones who wait tend to stay exactly where they are. If you've already told yourself you'll look at it later, I want you to notice that. Because later has a cost that most people never calculate. Now let's get into it. The first thing you need to understand is the concept that changed everything for millions of people. Compound growth. This is not a complicated idea. It is almost embarrassingly simple once you see it clearly. When your money earns a return, and then that return earns its own return, and that process keeps repeating, something extraordinary happens over time. Small amounts of money become large amounts of money without you doing anything additional. Think about that. Money working while you sleep, money growing while you're at your kid's soccer game, money compounding while you're stressed about other things. The math is on your side if you start and if you stay consistent. The problem is that most people never start properly, and many who do start don't stay consistent because they panic when markets dip and pull their money out at exactly the wrong moment. Here's a pattern interrupt for you. The people who panic sell during market drops are not irrational, they're human. But that human instinct to protect yourself in the moment is precisely what destroys long-term wealth. The market dropping is not the danger. Reacting to the drop is the danger. Now let's talk about index funds, because this is where things get practical and powerful at the same time. An index fund is simply a basket of many different company stocks bundled together. Instead of trying to pick which one company will win, you're essentially betting on the entire economy growing over time. And historically, despite every crisis, every recession, every moment of global chaos, the economy has grown over long enough time periods. Consistently, reliably, not every year. But over decades, the direction has always been up. This matters to you personally because it removes the need to be an expert. You don't need to research individual companies. You don't need to watch financial news every day with your heart racing wondering if you made the right pick. You simply invest regularly into broad index funds and let time do its work. This is not passive in a lazy sense. This is intentional in a strategic sense. There is a massive difference. The next principle is dollar cost averaging, and this sounds technical, but it isn't. It simply means investing a set amount of money at regular intervals regardless of what the market is doing. When prices are high, your money buys fewer shares. When prices are low, your money buys more shares. Over time, this averages out your cost and reduces the risk of investing a large amount at exactly the wrong moment. People who invest consistently through both good times and bad times consistently outperform people who try to time the market perfectly. And nobody times the market perfectly. Not consistently. Not over decades. Let's pause here because this is where most people's stories go wrong. And I want to speak directly to you about this. You might be sitting there thinking that you don't have enough money to start investing right now, that you'll do this when things are more stable, when you pay off this one thing, when the timing is better. I understand that thought completely. I understand the weight of it, the exhaustion of financial stress that makes every decision feel like a risk you can't afford. But I need you to hear this clearly. Time is the single most powerful resource in investing, and it is the only resource you cannot get back. Every month that passes without starting is not a neutral month. It is a month where compound growth that could have been yours simply doesn't happen. It's a month your future self loses. Not dramatically in a way you can feel today, but quietly, invisibly. And the total loss over decades is enormous. Here is something that social proof consistently shows us. The people who look back on their financial lives with the most regret are almost never people who invested and lost some money along the way. They are almost always the people who never started, who waited for certainty that never came, who let perfect be the enemy of possible. The people who look back with confidence and relief share one common trait. They started with what they had, not with what they wished they had. Now let's talk about diversification, because this is the principle that protects everything you build. Putting all your resources into one investment is not a strategy. It's a gamble. True diversification means spreading your investments across different types of assets, different sectors, different geographies, different risk profiles. When one area struggles, another may thrive. This doesn't eliminate risk entirely. Nothing does. But it creates resilience in your portfolio that makes the journey sustainable instead of terrifying. And sustainability matters more than most people realize, because the strategy you can actually stick with through market volatility and life changes and moments of doubt is infinitely more valuable than the theoretically perfect strategy you abandon when things get hard. Let's talk about tax-advantaged accounts, because this is free money most people leave on the table. Retirement accounts offered through employers and government programs allow your investments to grow either tax-deferred or tax-free depending on the structure. This means more of your returns stay with you instead of going to taxes. Understanding which accounts to use and in what order is one of the highest leverage moves available to any investor at any level. The cost of not knowing this is enormous over a lifetime. Not dramatic, not sudden, but enormous. Here is where everything we've discussed today connects into something real for you. Compound growth, index funds, dollar cost averaging, diversification, tax-advantaged accounts. These are not separate pieces. They are a system. And systems work when they're built correctly and followed consistently. The gap between knowing this and doing this is where most people live forever. And that gap has a price. If you are ready to close that gap, the programs linked in the description below are the most direct path I can point you toward. They go far beyond what we could cover here. Every day you wait is not a pause. It is a choice. And unlike most choices in life, this one gets more expensive the longer you take to make it. The cost of waiting is not someday abstract. It is compounding right now against you. Go check what's in that description. Your future is being written whether you participate in writing it or not.